And good morning and welcome to VSA Capital 5 Minute Morning Miner on Monday, the 14th of April. We're coming up to Easter and the weather's turning. Sod's Law, I think that's called. Morning, Paul. How you doing?
I'm pretty well, thank you. Pretty well, and interesting to point out too. We're having the podcast right here when the gold and the silver price are almost exactly a 100-to-1 ratio. So pretty interesting.
Well, yeah. I mean, silver just can't quite keep up with gold, can it?
Not at the
Um,
moment. No.
it's 100 to one. Even at 80 to one, people thought that silver was still cheap relative to gold. But gold is zooming. I'll tell you the other commodity that's actually very strong at the moment, which will come as no surprise to listeners to this podcast, is tungsten. Tungsten is sort of trading 370 to 390. So that's up about 30% actually or so this year. I know during PDAC, one of my tips was tungsten going to 425, and I said I'm looking pretty good. I don't know if you've got a comment on that, Paul.
Well, I would say yes, you are looking pretty good at this point in time, but it depends on how much the global economy might slow here during the year or how quickly, given all the turmoil that's going on in the USA at the moment. That's a really hard one to predict, I think.
Yeah, but tungsten is key in defense industry, and I think the defense industry is unlikely to be slowing short term. So that's one of the reasons it's so important. Anyway, I'm always looking pretty good, Paul. Sorry, just had to speak that in. Right, let's mining. Come on, mining. Let's start with one that's been a bit of a punter's favourite. Greatland Gold. They had a quarterly production update this morning. Paul, talk us through that.
Yes, they did. And this is for, and they also released guidance for all of 2025. That's for a 7-month period since they have now owned the Telfer mine complex as part of that deal that they have completed. Gold production, they predict coming for the guidance for 2025. Right around 200,000 ounces of gold at all-in sustaining costs. That's something under Australian $2,250 an ounce, and they will be spending growth capital in the order of 100 million Australian as far as further developments there at Telfer. No lost time injuries during the latest quarter here, so exemplary safety record at this point. Also debt free at this point with 75 million Australian available in a working capital facility. Production was at 90,000 ounces of gold and 3,500 tons of copper at an all-in sustaining cost at this quarter of $2,126 Australian per ounce of gold equivalent. And gold production, therefore, was 21% higher, and the costs were lower than the pre-acquisition mine plan had predicted when they did the deal in order to acquire the Telfer project. So it is looking very good at this point. They don't have any gold price hedges in place on the upside, but they do or have established some downside price protection in hedging, so that with put options at priced something above Australian $3,900 an ounce. So looking pretty solid there for Greatland at this point.
Yeah, well, it's you'd have to be a complete idiot to lose money if you're in gold production at the moment with the gold price where it is. Talking of which, Serabi Gold had first quarter production results, didn't they?
They have as well, and also one of those better developing stories here for 2025 from previous announcements or stories of coverage that we've done. Gold production here in the quarter, 10,000 ounces for an 11% increase quarter on quarter. Cash position is up by $4 million to $26.5 million through this quarterly period as of 31st of December. And net cash at quarter end was at $21 million as well. And the production guidance they've maintained at this point of something better than 44,000 ounces for the year. And if you've been following the press releases, they have been putting out some pretty encouraging news across their various individual operating mines and exploration properties here. So definitely also looking like a solid story at this point.
Yeah, a small little snippet. I see that Tinka Resources. We spent a bit of time talking to actually at PDAC. Very interesting tin and zinc explorer is the right word, I suppose. In Peru, they've dropped their Lima listing. They'll still be on the TSX. They're obviously a little bit stressed. It's a company that somebody should acquire. It's a great resource, isn't it, Paul?
It is, yes, and it's surprising it hasn't gotten more interest, but it would suggest that just from the price action or investor interest, that it is liquidity trapped, sort of a story. And as you say, under such circumstances, somebody uh, taking control of it in order to push this project along, because it is a really good project geologically. It just makes real good sense, I would say, given the outlook for both silver, zinc, and tin.
So there you go. If there's any junior mid-cap resource company that's involved in tin or zinc or those sort of metals looking for a great idea, there is one. Don't say we don't give you good ideas. Okay. Anything else you want to finally say, Paul, or we call it a day?
Well, this big hullabaloo here in the UK about trying to keep the Scunthorpe steel plant open here. At this point over the weekend, Parliament made took special action in order to make sure that there was adequate coal supply coming into the plant, such that the blast furnaces did not cool down. Gignier, the operator and owner of the plant there at Scunthorpe, was demonstrating that it wasn't particularly interested in order to negotiate in good faith to keep the plant open, even with a significant offer by the British government in subsidy support, which they had turned down at the beginning of last week. So um, it's really strikes me as funny that with all the coking coal assets that the UK naturally has, they're spending extra money and extra carbon miles to buy coking coal in from elsewhere to keep its own steel plant open. It just boggles belief.
Well, it's all part of Ed Miliband's crazy world. But don't get me onto politics, Paul. You know it's a disaster. We'll call it a day there. We're going to be back tomorrow. Thanks.
Very good. Thanks.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.